Alright, welcome back to the channel. This is my review video. This will be my first week of review for the stock market. So let's get into it. So this slide right here, we initially start with what I had last few days ago, which was the buy side. Buy side had been hit about 2 days ago. In other words, it's been purged 2 weeks ago. Just wanted to put it out there. This is what it looks like on a weekly chart now. So it's the same level over here for buy side. I just removed it. I've ran a fib from the lowest point of this run of just green candles all the way to the highest point, equilibrium right here. We can tell that there's two fair value gaps in there. And actually this week, as you can tell, after taking buy side, it kind of consolidated a little bit within the weekly area, but it went ahead and turned down bearish, and it actually hit exactly a little bit over the fair value gap CE, which I can't think of it right now. So if you know it, please let me know in the comments. Alright, so now we're moving on to the daily chart, and I would like to preface this by saying that I am reviewing the E-mini S&P March contract, that is ESH 2024. So while I'm reviewing the videos, just keep in mind I am practicing, so there's a lot of things that I am putting into practice, just like ICT says, and then eventually I'll be forward testing. So let's continue. So here is perfectly what ICT refers to algorithmically. This is not a random price. You know, this all price has a reason, or there's something behind it that doesn't make it random, which, as we all know, it's an algorithm. So this is just an example. So on this daily chart, we have a daily fair value gap within the weekly fair value gap. So as you can tell, it's a little bit darker blue here. So after market structure shift, we see that it actually went into the fair value gap. Friday, it actually hit the lowest at 47.02, and fair value gap being the highest of this candle. The highest point was 47.01 and 3/4. So it almost got there. It missed it by a quarter, but that wasn't buying pressure, selling pressure, nothing like that. It was the algorithm, and it tricks people to think like it's going to go down, it's going to go down, whatever the reason is. Sorry. And that just goes to show what is in there. So now this is the 4-hour chart. 4-hour chart. So this is just kind of showing a little bit more of an example. As you can tell, we have a market structure shift on the 4 hours as well. So not only is it the daily, but it's also the 4-hour market structure shift. And just showing 47.01 and 3/4, what candle was the one that formed, and the lowest at 47.02 for last week Friday. This candle, we have a 1-hour chart for the entire week. So within this chart, I do want to note that the old low that was previous session, not this Friday is down here, but last week Friday, the old low was revisited here, and this is the part where ICT says old support becomes an old resistance in retail eyes, but in reality there's a level of sensitivity within that area, and that's why it kind of reached back into it. There's other price action where it also did the same thing, but this was a big notice. And then also there's a 1-hour fair value gap within the area. So if I had a fib from this high to I think this low, and the equilibrium was within that area, and the 62 level was right above the CE of the fair value gap. I can't think of the name right now. Yeah, so 1 hour chart, as you notice, market started to shift. There was a retracement, took out the swing lows down here, retraced a little bit higher, but it didn't take out the previous high, came down, again up. I think this is the third, but the third, it ripped all the way low to the, let's go back, which fair value gap is that? I don't remember at this moment. So the daily fair value gap, it hit perfectly the top of it, kind of meandered around, took the swing high, went back into it. And as you notice, there's a lot of times where the stock market seems random and it just goes up and down all day long, but it goes up and down for a reason. So it created a little bit of buy side here, and then it took out the buy side before going to the sell side down here. And then the sell side is our target, what we're looking for. And then the following day consolidated a little bit, created a little bit of buy side, took it out, and then took it out even higher, took out this buy side as well, before taking out the sell side, which actually took down the sell side from the previous day. So it just keeps doing what it needs to do. And then not only that, but look at that, almost close to the daily fair value gap low before going up, making people think that, hey, we're going to go up. We already went low enough, but in reality, it just started trickling down little by little. So moving on, 15 minutes, sorry. So this is for this week's trade. So it was, Monday was a holiday, Tuesday trading, Wednesday trading, Thursday and Friday. And I just wanted to put a 15-minute chart up just to remind folks, with a bearish outlook for the week, you can see how it ended up trading throughout the week. So it dropped drastically before opening hour, around this area, consolidated, kind of chopped back and forth, and then it retraced back in from this previous drop, which, if you can put a drawing there, it's a fair value gap. Before it goes for sell side, it took out sell side. Then, as a reminder, the power of 3, that's exactly what it performed right down here, created a low, but it doesn't close there as low. Instead, it goes up and then it starts to close. So in this example, it opened right here. It went higher, so it created a little high. It went all the way down, created the lows, and then this is the lowest point, which is down here. And then it went right back up to close a little bit higher. So remember the power of 3, which is accumulation, manipulation, and distribution. So same thing on the next day, created a little bit of a high, it dropped, created a low. The swing high took out some of the buy side before going for the sell side, which created the low of the day itself, and then it came right back up, retraced it up to the close. So a little bit of action of power 3. Same thing with this day. There's a swing high, it goes all the way down, swing low, but it doesn't close at that price, it closed a little bit higher. And then Friday, I will mention, which I didn't mention last week or this week, or right yet, is that this was NFP week. So ICT's protocol for NFP week is you find a trade Monday, Tuesday, Wednesday morning, and then after that you just study price action, especially as a beginner, which I learned the hard way, because Thursday it took a lot of losses. I ended up losing a prop firm account that I already had a loss on previously. So yeah, so NFP news released, which created the low, almost like a quarter away from the daily fair value gap, and then it started to run higher. Eventually, kind of went down, consolidated, and closed out. So moving on. All right, so here we have 15-minute. We're looking at the Tuesday trading day. So Monday opening, this was New Year's Day. So we saw the stock market open a little bit. I made the new week opening gap, opening price for opening, and then for the Friday close, which, as you notice, it did a little bit of a Judas swing higher before it dropped lower. When it dropped lower, it had a little bit of retracement. that retracement went to 48.17 and 3/4, and the new week opening gap high was 98.18. So a quarter of a way, or a quarter short, before it gave up the ghost. Amazing. Like this, algorithmically, it's amazing to see this. So at the time I had a fib. So as you can tell, I did the high of before it dropped, and then I just did the lowest to low between, I think, 9:30 or 10, just to kind of get a feel for. So this was a equilibrium 50%, and then 62 level optimal trade entry. So it did retrace back, kind of taking out all the buy side here, before giving up the ghost again, taking out the morning buy or sell side, sorry, retracing higher, and then closing out the day. Now we're going to drop into the 5-minute chart, and I don't have it on pre-strike, but on the 5-minute chart I have the previous session low. So within this area, 5-minute chart, still talking about Tuesday, we notice here, so we notice here we have the previous session low. Now overnight it did take it all out. Before even 7 in the morning it had ran past it, consolidated a little bit if you kind of think about it throughout the morning before running up to the previous session low. And as you notice, there's no body of the candle was higher than that. It just purged it pretty much. It just wicked it. But it did kind of like magnetize towards it, which is interesting how price reacted towards it. And then if you notice on the 5-minute, there's a fair value gap that was actually created. And when you extend it out, you can kind of see that area. And I do want to make mention that 8:30 is right here, right? So we have buy side a little bit in this area and sell side down here. We took out sell side, then we went for buy side, then we took out sell side, created a 0.9, and then at 9:45 or so we took out sell side, and then retraced higher but did not take out the buy side yet. And then a little bit right before 11 we took out the sell side once again. So that's 2 sell sides being taken out, and then ultimately you reach for the buy side, which is these 2 areas right here, before lunchtime. And then during lunch, or previous to lunch, or during lunch I guess, it created a little bit of a buy side, which is a fair value gap with the 5-minute, the previous session low, and the buy side created here, which is equal highs. Lunchtime tends to take out those buy sides and seek liquidity, so it took out the buy side and it's running for the sell side. Took out the sell side, and as you can tell, it gave up the ghost for the rest. And then at around 1500 it actually took out the morning sell side liquidity before running up without taking any other liquidity of the buy side created here. It did take some of this, but then closing out. So here now we have 4-minute fair value gap. So this is the same Tuesday. In this area it's more just to show that there was a silver bullet AM session trade that could have happened. A little bit more riskier in my opinion, but it still could have happened. We still have the 5-minute fair value gap, previous session low. Now at let me see what time. So 10 in the morning is down here. So this green candle right here is 10 in the morning, and then we have 11, one of these candles. So what we notice is that at 8:30 buy side is taken out, then at 9:10 or so sell side is taken out, buy side is taken out again, and then there's a huge candle. There's a displacement right here, displacement to the downside. We're already bearish for the week. We already have a bearish outlook on the daily and on the 1 hour, and this is 4 minutes now, so we're on lower time frame. So we notice that there is a retracement higher, retracement into that displacement candle. The bodies of the candles did close above it slightly, but if you had your stop loss above the displacement candle, above the fair value gap candle, you would have been fine. You would have felt a little bit of heat, but still a trade. So entry would have been 47.82 area. Actually, I have 47.82 in the quarter to 47.74, which is the sell side. Could have been a target. It hit it nicely, took out sell side real quick, and then it went higher. So that was a trade. Putting the fib on there, you can see the equilibrium was anything above this area. So in here, this is discount and this is premium. So you want to, I'm sorry, premium, discount. So you want to sell premium and buy it back at a discount. There we go. So 62 level, optimal trade entry. So an entry in the fair value gap, or 62 level would have been great. So yeah, that's a trade. All right, it seems that my Camtasia crashed halfway through, so I'll be editing this part into this previous video. So we just talked about the 4 minute. So zoomed into the 1 minute. This is same day. So 1 minute we had the same fair value gap created by the 4 minute fair value gap. So 4 minute fair value gap, I put in the 1 minute fair value gap I noticed in here, had energetic displacement candle. This day I did take a trade. It worked out a lot better than I expected, because I was actually expecting it to go to this volume imbalance, as you notice here, but it didn't, which is great. So we have the displacement lower, create a little bit of relatively equal lows, went higher, retraced into that fair value gap. What I noticed to take the trade was I noticed that they had a displacement candle within the fair value gap. So we had a little bit of a market structure shift taking out this low. Displacement candle, drew out that fair value gap, took the trade. Within this area, the stop loss would have been above this one or above this one, so would have worked out either way. I was expecting the volume balance to be revisited, but it didn't, which is, different. But eventually gave it the ghost and kind of took out the sell side. Great trade. So here we have the PM session. This was something I didn't see. It's more of a hindsight thing, just to kind of study price action. So we have the equal lows during lunchtime. Lunchtime took out the fair value, the equal low, the buy side, and it took out, or it went into the 5 minute gap, value gap, and the previous session low. So lunchtime was very, let me look for liquidity, essentially. So it dropped down, took out the sell side. A little bit of a retracement, which actually created the buy side. It was relatively equal highs before dropping down, taking out sell side. During taking out sell side, there was actually a displacement candle. There's another fair value gap within this area, but I highlighted this one just for practice. So then it created relatively equal highs, kind of kept going lower, lower, lower. At this point, created a swing low. There's a high. The swing low did not take out the previous sell side. Instead, there's a market structure shift with this candle. Not only the market structure shift, but there's a displacement energetic candle going to the upside. Kind of created the fair value gap. I think I have it on 2 or 3 minutes, as well as this order block. So this was done previously. It retraced into the fair value gap. It did touch the order block, but it didn't close anything below the order block, which is great. Kind of consolidated a little bit. Another market structure shift, back retracement into the fair value gap, but not taking out any of these previous lows, and it touched the order block perfectly. It wicked it to the T, but didn't take it out. Then it retraced higher, and eventually, I think at 1800, it took out buy side before going lower. But if it was to be a trade, at this point, you can take an entry into the fair value gap, into the order block. You can scale into each one of these, essentially target these relatively equal highs, this fair value gap, or eventually the buy side that is in there. So now we are on Wednesday. This is labeled wrong. So Wednesday, 15-minute chart. On this chart, I did annotate the previous session low. Kind of the afternoon session went into that area. Just interesting to see the activity of the the price action relative to those areas. So these lines eliminate the buy side and the buy side that we had sitting there during the AM session. The afternoon session took out the AM session high. New York open after 9:30 or so. And then we had created a low for the day, or in the AM session. Lunch did not take out that low. It did create a low for the day, took out buy side, and then during the afternoon it actually took out the sell side before going to the buy side, before going to the sell side. So it's interesting how it's not a simple, it's going to go down. It creates an area, it takes out the buy side on one, it swings for the sell side to take the liquidity there, and then it ultimately reaches for the buy side, which we had noticed before in the AM, and then ultimately to where the bias is, which is bearish, going down to the sell side, taking out all the sell side sitting from the afternoon, lunch, and in the morning session before closing out. So here we have a 5-minute chart. So there's another kind of silver bullet idea at this point. So we have in the AM session, we have a displacement candle right here creating a fair value gap. So I'll have it highlighted here. So once this candle formed, you could essentially took in a trade within that area. The only thing is that it, for my liking, I guess, it didn't have 10 handle move to my target essentially. So essentially it would be what, 47, let's say, and the entry would have been 47.55. It would have been about 8 points or so. So when it's tight like that, it's a little bit riskier, which, as we can tell, a 5-handle move would have worked out fine, but not looking for the sell side or anything like that. So then during lunch, notice how lunch took out the sell side sitting here right before lunch, and then reaching over for the buy side, taking out all this fair value gap action, but not taking out the morning buy side until later in the afternoon, when the lunch buy side had been created. The afternoon session actually took that out. Now, before taking it out, it actually took out the sell side down here, the lunch sell side. So again, just like we mentioned, it creates a low. Then during lunch, it takes that out. During lunch, it goes for the buy side. It created another high. Sell side during lunch during the afternoon session was taken out from the lunch session, and then it reached for the buy side, which was sitting from the lunch buy side and the AM session buy side, before going for the sell sides, all the sell sides, which eventually is to the fair value gap on the daily and on the weekly. Within this area, there is another trade that could have happened. I didn't really annotate it, but you notice there's a low created during 14 to 1500 hours. So it didn't exactly take it out. It did retrace higher, so it could have been a target trade for this area, or the daily fair value gap, which is exactly what happened. It's just for practice. So 4-minute, a little bit more focused. So here we just noticed the lunch buy side and the lunch sell side was purged on the 4-minute chart. 4-minute has a fair value gap as well, kind of consolidated within it. It is a little bit smaller than the 5-minute because less candles, more focused on it, you know. Now, something I did learn from ICT that had made me struggle before because I didn't really understand, is that even though you have a 4-minute fair value gap, let's say you have 1, 2, and 3, let's say 4 candles here, right? So this candle is displacement and this candle is displacement. This one is not and this one is not. This one took out the buy side, but there's no displacement. Now, there is a fair value gap created within this area, which is this low and this high, right? So that space in between, the price will rebalance to it. It doesn't have to close out completely, but it will revisit that area, right? Now, there is a fair value gap down here. This low and this high creates a fair value gap. But the way ICT puts it is, if you put a if you put a fib retracement on this leg, on this, from swing high to swing low, equilibrium is not this. This would be in a discount as it is already. What you're trying to do is you're trying to sell on a premium so you can buy it on a discount. So you don't go for these fair value gaps that are lower, which is at the end of the swing low. You go for equilibrium and anything above that has a fair value gap. So in this example, let's just say this created a fair value gap here. You would take an entry here because this is where equilibrium is, but you should expect it to have some sort of play within this fair value gap as well, because it's within the premium before going to discount. And then for going higher at that point, for the reverse side, if you're going for buy side, let's say you're going long, let's say this created a fair value gap and you're looking for an entry. From here, let's say to here, equilibrium is here, and let's just say there was a fair value gap in here. You're not going to buy a fair value gap in a premium. You're going to want to buy it at a discount, which is down here somewhere between this candle and this candle. This would be a discount, and you want to sell it at a premium. You want to buy something cheap and you want to sell it really expensive. Vice versa for sell side. You want to sell it very expensive so you can buy it back cheaper, make a profit between that. So that's something I very much struggled with. Even though there's a fair value gap, that's not what that means. It means you need to look for equilibrium and above, or the 62 level optimal trade entry, or I think 71%, 72% for optimal trade entry. And yeah, so moving on. Now we focus on a 2-minute chart. So 2-minute chart, again, if we put the fib retracement within this area, we do have fair value gap, fair value gap, fair value gap, fair value gap in that area, but you're not going to go down here for this fair value gap. We're going to look for equilibrium, which is in this area, and above, which technically you could have made a fair value gap within this area and a small fair value gap within that area, and it could have traded there and still been bearish. Just, you don't want to see it go any higher than that, but there is a possibility. So 2-minute and 1-minute chart. So I left the fair value gap of the 2-minute in there. You can tell how it kind of combined, or how it is combined a little bit. So 1 minute, it's within the silver bullet AM session. So we had a high created about 10 in the morning. Then we went higher, we took out that buy side there, displacement lower. Entry could have been within the silver bullet AM time frame, would have been like 5 handle move right there. Getting into the trade a little bit after 11, which is the silver bullet AM session end time, would have been riskier. As you notice, it would have been a lot of holding, consolidation, and you may have had a move, but you would have to probably wait until lunchtime, and then during lunch it's very unlikely that it can or will happen. So it's just very risky coming out of 10 to 11 and 14 to 1500. So this is the PM session. I didn't really notice this one, which is crazy because this was a great move. So silver bullet time between 1400 and 1500. So we had the lunch buy side high in this area. We noticed that within the silver bullet time frame, there was no trade to go long, but at the same time our bias was bearish. So I would have just looked for a bearish setup. At this point, buy side was taken out. There was no willingness to go higher. In fact, there was a willingness to go lower. There was a displacement with a 1 minute chart. Draw the 1 minute chart out. It did retrace higher, but if you would have kept the stop loss, I guess at the swing high, at the high of the PM session essentially, it would have never been there. It actually didn't even hit these buy sides 1 and 2, which would have been great. Would have dealt with a little bit of heat, yes. So that would have been one trade. Another trade would have been seeing this fair value gap. You see the retracement, then you notice that there's another fair value gap created within the fair value gap. So another displacement lower. Within that, you can actually tell that the high of the fair value gap was revisited. Then there's another displacement lower, which is another fair value gap, which it uses the same fair value gap low for this fair value gap for this fair value gap high. So which is why you only see one line there. But this is the low, this is the high for that fair value gap, and then this is the high, and this is the low for that fair value gap. So multiple entries. So this could have been risky, you know, you might not have liked it, but seeing this action could have been in there, and then seeing another action kind of take it there. And then you could have used the PM session sell side as a target, which was hit about 15:45, a little bit later throughout the day. Or you could have gone for a 5 handle move, whichever one is a lot better. So here we have Thursday and Friday. The reason I put Thursday and Friday is because according to ICT's protocol, Thursday and Friday are just study days. You don't trade them, you just look to see what's going on throughout the day. So 15-minute gap, 15-minute chart. We have a little bit of buy side consolidation here. Took out, sell side took it out during the opening, or sorry, took out sell side during the opening. It also took out the previous session sell side liquidity, as you can tell right here. Went higher for the buy side before giving up the ghost and going lower and lower and lower. Friday, 8:30 news, dropped all the way, a quarter of the way of the daily fair value gap low. Went higher, kind of came back, retraced a little bit, retraced within the downside of this price action. Went down, took out the sell side, went up and closed out for the day. So here we have a 5-minute for Thursday. Not really interested so much on this day, but as you can tell here, there's a fair value gap within that area. It actually set up for a silver bullet AM session trade here. Because the bias was bearish, it wouldn't look good to do a bullish trade. And at the same time, Thursday and Friday are highly manipulated, highly algorithmically completed. That is just risky, but interesting to still see. So took out all the buy side. Market structure shift, went down during lunch, created a low between 1300 and 1400, kind of consolidated to the upside before taking down the sell side, retracement, and then it took down the sell side even further. Alright, so 5-minute, this is for Friday, January 5th. So I put here 8:30 news. We had non-farm payroll, we had unemployment rate, we had average hourly earnings, and at 10 we had ISM services PMI. You don't exactly know what all that would entail, except the fact that it's very highly manipulated. And it's not a good time to trade. It's a good day to study price action, and that's pretty much the only thing you should be doing. So using the 5-minute, correct me if I'm wrong, but I believe this is a breaker, and the reason for that is that this was a previous high that was taken out, and it's a kind of a sensitive area. So here's a low, high, and then it did build a lower low, but then it built the higher high, kind of retraced into that area of the breaker as well as a fair value gap. So I'm gonna leave it as a breaker. I don't think it is, but I'm learning. So let me know what you think. So 4-minute. So we have our possible breaker here within the area. As you can tell, there's a lot of fair value gaps within that area. At 8:30, when the news did come out, this is what gets a lot of traders. They believe that the stock market's going to go down. You know, it's a day of going down, and this is all it is. Which at 8:30, it does go down. It takes all the sell side, but it doesn't go lower than the daily fair value gap. So if you didn't take any profits, which is hard in you know, news-driven events, when they suddenly just drop the price, you're going to get caught up in all this price action, and it's going to go against you before going and taking, you know, consolidating and going down for the rest of the day and all this other stuff. But that's why you don't trade. I also do want to point out that between 11 to about 12:30 or so, we did have move down lower, putting that fib on there. Equilibrium is within this range and 62 level, so it did go. And also this is the high of the daily fair value gap before taking out the sell side that was created, you know, around 13:15, 13:30. So 3-minute. So in the 3-minute, this is something that's very interesting, because this just goes to show algorithmically the price action essentially, and this is what ICT kind of bases his ideas on. Well, not ideas, but his concepts on. So 8:30, news driver came out, dropped significant amount. You know, people are thinking it's going to keep going lower. They get trapped in there. Then we have a market structure shift on the lower time frame. Then we have a displacement going higher. Within that displacement, we notice that there's a order block on the 3-minute. Now, the order block, the high probability order blocks consist of a fair value gap in addition to it. So these may not be the most reliable order blocks because there's no fair value gap, but I noted them because of the fact that the order block, the opening price order block, is very sensitive in terms of price. So this green candle right here, it hit lower or lower than the opening price of this order block, but never closed underneath it. So it revisited that area before going up higher. Then the order block for this price, the high of the order block was actually there was a reaction from that area. It actually hit it to the T before going higher, and then these 3 candles making it one order block. The opening price of that candle, I extended it out. Come to notice all this price action, it doesn't close to the mean threshold of it. So it does wick it, but it's completely normal to wick it because it doesn't close anything below the mean threshold. Then this order block right here, it's a little bit harder to see, but this order block here, opening price, extend that out here. We did kind of wick through it twice, but look at the reaction from it. A nice displacement higher. Then another order block here, opening price, I'm sorry, the high of the order block, revisited. It didn't even go to the opening price of the order block. It just wicked through the high of the order block before there's that nice reaction to the upside. Another order block, opening price, kind of, it did close a little bit below the opening price, but not below the mean threshold, and then nice reaction to the upside. So now we have a 2-minute. Now I left all the order blocks the same, so this is just kind of to show what could have been done with the order blocks. So on a 2-minute chart, let's say you have 3-minute order blocks and a 2-minute chart, and you have a lot of fair value gaps, which is noted in the white. So this is a fair value gap. We have, first of all, we have market structure shift. We have a displacement to the upside. We have the fair value gap as an entry. Then we have another displacement higher, creating another fair value gap right here. Within this fair value gap, actually this one and this one created a fair value gap and an order block. So that's a high probability order block. Then we have another fair value gap up here. Another entry could have been taken. Then reaction higher. Okay, my KMT just keeps crashing a little bit, so continue on. So 2 minute order block, as I mentioned. I'm sorry, 2 minute fair value gap with the order block is what I was mentioning. So we have a nice displacement up here. Now we did take the swing high, which is the area that's sensitive, kind of reactive within that area. So fair value gap, we had an order block. It did touch the order block, didn't close below under the fair value gap, which is good to see. Then we have order block. These two candles become an order block. Nothing closes below the mean threshold. Consolidate a little bit consolidation. This order block right here, it did close around the mean threshold, but it didn't close below the mean threshold. And then opening price actually went a little bit lower than it, but nice reactionary to the upside. Another displacement here, fair value gap. There's an order block, touched the order block, but it did not close below the fair value gap, so it would have still been a valid trade, whether taking entry in the fair value gap or in the order block, or seeing the order block and then taking entry in the fair value gap, either one. And another order block within that area, boom, nice reactionary price there. And we have a 1 minute chart now. So this one, I have fair value gaps in the 1 minute. The order block on the 3 minute is left alone. So as you can tell, fair value gap, nice reaction towards it. A stop loss right here would have been fine for this one. Would have been higher. Got a scaled in here. Got a scaled into the order block, fair value gap. A lot of order block examples. Now this one did not allow you to do a silver bullet entry because of the fact that first let's go to the upside. Bias is bearish, so didn't really like that. And then second, by the time 10 a.m. in the morning hit, it actually went higher than all this price action. So it had already reached a certain area, which is the daily fair value gap high. We're already expecting lower prices, so just good to see this. And that's pretty much the only thing there was for me. And yeah, that's about it. Let me pull up this now. Okay. So this is the only thing I'm going to be talking about this one. So we have, let me change this. So we have NASDAQ. Yeah, so we have NASDAQ NQH 2024. This is my drawing, so bear with me. Okay. So we'll just do ES because I've been focusing on ES. So ES weekly chart, we did hit the consequent incur in the CE of the fair value gap. I almost got the name. I don't remember it right now. Actually, we did hit it. We hit it right below it, which is the lowest 4702. We have a 4704 and a quarter, roughly. And then we have another fair value gap underneath all that price action. We do have a small fair value gap within that area, but just kind of see what happens during this time frame. Daily chart, we have the weekly fair value gaps there. So this is the daily chart fair value gap I had mentioned. So I would like to see what happens within that area. You know, do we do an inverse fair value gap? Do we actually bounce back? Like, what actually happens? No idea, and that's what I'm studying. So 4-hour chart, we are still bearish on 4-hour as well as the daily. Well, I don't know. I won't say for bearish or not. I'll just say market structure shift for 4 hours, and we'll see what happens. 1 hour. Yeah, 1 hour has a good amount of price action. So we actually did open Sunday 1800, so on this area. So we'll see what happens tomorrow. I do want to see the dollar index. What the dollar index is doing. So we have a little bit of a sell side liquidity on the bottom. Now, we are bearish on dollar. I believe you can reach for the sell side down here. There's no fair value gaps in between. There's no order blocks. There's nothing else than the sell side from July 17, which is a long time ago. But I still believe we'll get there eventually. As you notice, we are bearish. We have displacement lower. We have a retracement, another displacement lower. Now within this fair value gap, which is interesting, is we actually went to the high of the fair value gap, and we're kind of within this area, so we still have room. And as the dollar index goes down, the currency should go up. Here's what we've learned. So daily, what do we have here? So on the daily, we actually had a volume imbalance here, which is why kind of retraced back in there. This is also a fair value gap here, so all of this price action is of interest, or was of interest. So did that. Interesting. So 4 hours. So just opened, kind of in there. Let's see the 1 hour. 1 hour. This is a long wick, but the wicks are very interesting. Very interesting. Could be a nice little target for later. We have a little bit of a market structure shift again. Displacement lower. There's a fair value gap in between here. So I wonder what it would do in 1 hour, because we are in that fair value gap right now. Right, and yeah, that is the end of my review. Just let me know your comments, questions. If you can answer what the breaker is for me and educate me better, I would appreciate that. Yeah, and if I can think of the CE, consequent encouragement, I think it is. I'm not too sure. But yeah, thanks for viewing.